Hey, good morning, everybody. It's Hammer. Today is Wednesday, June 5th, 2024. I, of course, with Originator Success here with your daily mortgage rate update, the only place on the web where you guys get to be part of the conversation. Appreciate you joining me. Remember, you can join me live each and every day at 9:30 a.m. Eastern Time. If you're here live, say good morning. If you're watching on the replay, don't forget to go ahead and give me a hashtag replay in the comments. Let me know that you're here. Don't forget to smash that like button, tag an hello friend, share us in the group. If you're on Facebook and if you're on YouTube, don't forget to click that subscribe button, click that thumbs up thing. Make sure you say replay in the comments or say that you're here live. Let me know that you're here and all that good stuff. So here is your quick take, especially if you are watching on the replay. Today we are still floating because traders are tilting dovish. What does that mean? It means markets are growing optimistic that the economy and the labor market is slowing down and that the Fed will cut rates this year. So mortgage rates are improving slowly but surely. And of course, we want to watch Friday's big BLS jobs report. That's going to have a make or break for mortgage rates for the week. That is the quick take. With that out there, let's go ahead and say hi to the live folks who we got here this morning. Good morning, Ms. Monica Dinkins, Robert Bashirs. Good morning, sir. We got some good news. We do. Yasmin Martin, good morning. Dan Crowley, great to have you here. Megan Lindberg, hello. Hope you guys are doing well. While we wait to see if Ron Siegel comes in and tells us what the day is, there he is. Morning, Kenny Rivard. Ron says today is National Ketchup Day or National Veggie Burger Day. Ugh, yeah, no veggie burger. National Moonshine Day. That would be big out here in Appalachia. We had Popcorn Sutton right outside my door. Is where he used to run his still out here in the holler, as they call it, and National Gingerbread Day. So my question of the day, what kind of ketchup do you go with? Are you a Hunt's or a Heinz? And is it ketchup or catsup? So let me go ahead and post that question of the day. Hunt's or Heinz, catsup or ketchup? That is the question of the day. Let's go ahead and put it down there. So, and thank you, Ron. I'm having fun with these. I appreciate you doing this every day. So, question of the day, are you a Hunt's or a Heinz? I am definitely Heinz. Hunt's way too sweet. And is it catsup or ketchup? It's ketchup with a K. Ketchup. Ketchup and Heinz. Mallory Fotiadis, she's got it. Rob Stewart said, what a burger, ketchup. I don't even know ketchup like that. You can't even do that. Megan said ketchup. No brand preference? Okay, Megan. I'll let that slide. Monica is a Heinz woman. Michael Love, Heinz, no knockoffs. I got you. You go into a place and you see that Hunt's, that shit is sweet. Even Heinz. I like the Heinz Simply whatever one. But Ron said Heinz ketchup. Who uses catsup? If you see catsup on anything, then you know you're in the wrong place. Yeah, no cat soup. Exactly, Ron. You got it. Mason said cold to room temp is the real question. Room temp for me is preferable. I'm with you, Mason. Room temp. And yes, you can leave it out. I know it says keep refrigerated, but that's because they don't want to get sued. Allison Foy, good morning. Allison, are you a ketchup or a catsup? Heinz or Hunt's? Let us know in the comments. Brian Reed, Heinz all day. If you are watching on the replay, oh, you're from the Berg? I'm going to Pittsburgh on Friday, by the way. You know I don't like Pittsburgh, though, right? I know. I know I'm offending people, but I'm an offensive guy. I don't like Pittsburgh, but my sister lives there and my amazing nieces, so we're going to go visit. So there we go. All right, my friends, let's go ahead and get rid of this. Thank you so much. Talk about what we got going on this morning. So today, rate sheets are looking good. Mortgage-backed securities are currently up 12 basis points to start the day. Markets are seeing signs that the labor market is starting to soften, including this morning's ADP report. All right, so there's a lot going on that we're going to talk about, but the fact that mortgage-backed securities are up 11 basis points. Look at this chart right here with the whatchamacallit, the 48 hours, or we've got this as a 5-day chart, right? Look at how back here on the 30th, which was Thursday, we were down to the lower levels and how we have continued to improve day by day. Look at this rebound. Very unexpected, not going to lie. Very unexpected. Let's talk about why are we seeing this and what does this mean? So right now you're seeing mortgage rates improve, and it's because right here we've seen this candlestick. Look at how, let me go ahead and put this at the, these arrows are not cooperating. Let me try again. There we go. Okay. Putting it here at the pivot point, putting it up here. Look at this. So remember right here, this was the CPI data, right? let me move this so that it's a little less distracting. Hold on a minute. Let me move this over here. Let's go ahead and add a black screen and move this over there. Okay. So looking here, my friends, at what we've got, and let me pop my head up next to this. Okay. So let's talk about this. Let's go into this in detail. Right here, the highest point on the candlestick chart. This was when rates are basically at their best level. When we see the Japanese candlesticks moving higher, green candlesticks moving up, that's good for mortgage rates. When it moves down like it did right here, we see red, 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 red. This is bad for rates, right? Well, right here, this was the CPI data last month. We broke above this green line, which is the 100-day moving average. But the next day, it started here and it fell down and closed below that line right here. And then after that, we came up, we tested it, came back down. Then big losses last week, which were very crazy before they rebounded. And then this week, we've seen real improvement. Look at, since we hit that low point and we saw things reverse last week, look at how we've seen almost a straight up and down. And that's a very, very surprising turnaround. The reason we're seeing this turnaround is because we've seen a shift in mentality, right? Bond traders pile into fresh bets on a faster pace of Fed cuts. That's why we're seeing what we're seeing right now. The reason that we've seen this, hold on, I'm looking to see what's behind there. Oh, it's the same thing. Okay. Hold on. I got to pop this back. Oy vey. All right. The reason that we've seen this is because, take a look here. When I'm going to make this a little bit bigger so you guys can see it a little clearer. Hold on a minute. Let's really zoom in on this. Boom, boom, boom. Okay. So taking a look here. Remember that I'm using the compare feature right now on CME, and this is Fed futures. We're in December. So at the end of the year, these numbers along the bottom are what the Fed policy rate would be. So 5.25, 5, 4.75, 4.5, 4.25, right? So when we look here, this is today, the dark column. This is yesterday. Then this is a week ago. A week ago, markets were pricing 20% that we would be at 5.25. There was still a 20% expectation that the Fed would not cut rates at all for the year. Now that's down to 7%. Over here, there was a 42% expectation that we would see one rate cut a week ago. That's back down to 30%. A week ago, there was only a 28% expectation that we would see two Fed rate cuts. That's up to 40%. There was only a 7% expectation that we would see three rate cuts. That's back up to 19% or 20%. Now, this is a big deal. If we get that labor data on Friday and it shows market weakness like it did last month, we will see rates drop back down into the sixes, high sixes for conventional conforming. And Govy stuff's already there. And we will see this expectation that the Fed will cut rates will continue to increase. All right. That's the big deal right now. So for today, you want to continue to cautiously float. Hold on. Let me change this because it's not. We want to cautiously float. Yesterday, we talked about locking loans that were closing in the near term, right? Why were we doing that? Well, because take a look here. When we look at mortgage bonds, do you see how this green line right here? This is the 100-day moving average. And you can see that mortgage bonds have spent all this time below that 100-day moving average. Yesterday, when I put out the morning, information, we were really flat on the day. Mortgage-backed securities were down a little bit, then they were up a little bit, then they were down a little bit, then they were up a little bit. All right, the JOLTS data came out. It was kind of mixed, but it helped to improve just a little bit. But as the day progressed, look at this green candlestick right here. It really, really pushed. And this morning, the fact that we're starting out with some gains, not huge gains, but more gains, the fact that the 10-year Treasury yield continues to drop 4.30. Now, remember, this is 1, 2, 3, 4, 5 days ago, we were at 4.61. That's a 31 basis point drop in 10-year Treasury yield. That over 5 days, that is a very big deal. This is a very big indicator that we are seeing a shift in market sentiment, that the markets believe that the economy is slowing down, that the labor market is softening, and that the Fed is going to have to cut rates. Right now, a Fed rate cut being priced in September. July, still really not being priced in at all. There's only, we'll put this on current so we can get it a little, there's only about a 20% expectation that we could see a rate cut in July. I don't think that that's going to improve above 40% even at all. But however, September, look at this. There's a 30% expectation that will stay the same, which means a 70% expectation that it's going to drop. When we look at November, that increases even further. Come on. Down to 20%. And by the time we get to December, that's when we're down to only 6% that believe we would still see no Fed rate cuts. This is going to continue to improve as we see this. So right now, ADP payroll report came in showing a little bit better than expected. Let's go ahead and show this here. This is the 5 things to start the day. I'm going to go ahead and put the outlook on here. Let's see, what did Ron have to say? U.S. job market seen a notable decline in job openings since peaking in March 2022. Job openings have fallen by over 4 million positions, with a significant drop of 296,000 in April alone. The decline is largely concentrated in the private sector, healthcare, finance, insurance, construction being the hardest hit. Medium-sized firms bearing the brunt of these losses, while large companies and small businesses are seeing a more mixed impact. Absolutely. The question is it going to hit on the headlines, and are the traders going to bite? That's really, though, we know that they don't dig deep enough. But here's the thing. So we've got a few things going on that are helping us and why we want to go ahead. Yesterday, I talked about possibly locking anything closing in the near term. Now we want to be floating everything. And I think we're going to want to float into Friday's report. Now, there is some risk to floating into Friday. Why do we want to float into Friday? Well, we've got not just Friday, but next week, we've got the inflation report and the Fed meeting. We could realistically, if we take a look at mortgage rates right now, we are right now, it's showing 7.07. If we get favorable data on Friday showing a weakening labor market, higher unemployment, and lower wages, if we get CPI data showing inflation continues to progress again after stalling at the beginning of the year, if we get the Fed and a Fed press conference where Powell starts dropping nuggets that they're watching, but they need to see more, and people start to like what he says, we could see rates that are 6 3/4. We could see at least a 0.3 of a point drop over the next week in interest rate if we get favorable reports. That's a lot of potential reward. If we see that, it's going to help get people off the fence. We're going to see things moving well again. Ron said September seems like a hard time for the Fed to reduce rates with being election time. Other central banks are starting cuts. You know, Ron, I am not buying into the political one on this one nearly as hard as everybody else. Maybe I'm naive. I don't think that Powell and the Fed really care. It's their legacy. And I don't think it really matters what they do as far as, again, if they drop rates in September, it's not like all of a sudden, boom, we see this like instantaneous reaction. We know that all this stuff is lagging and it takes, months for things to happen. So if they were really looking to improve things into the election, then they would have done that already. I don't think politics are playing into as much with the Fed as maybe some others do. Maybe you do. Let me know in the comments if you do. I don't. I really don't. I think that the Fed is doing what they're doing for their legacy and for the economy. And I don't think that part is really going to make a difference at all. So, but looking here, I think we do, as we roll into that, I want to show you guys something though. I don't want to get into politics too much, but I want to show you something, right? So on TikTok, I know that people are going to be like, Hammer, that's the stupidest thing ever, but I want to show you this. I don't want, oh, that's terrible. Here you go. Watch, look at this. Okay. Look at Trump's account. He's got one video from when he was at the UFC event the other day. Okay. One video. Here he is with Dana White. 5.5 million followers. When you take a look at Biden, guess how many Biden has, by the way? When you look at Trump, 5.5 million. When you look at Biden, hold on. How many followers do you guys think Biden has? I'm trying to get the search bar up again here. Come on. No, I don't want the stupid for me. I just want the search. Here we go. Yeah, 7 is about right, Mike. Biden has 359,000. Okay. 5.5 million. And he's been on it for months. And he's sitting here, look at all these videos and all the stuff. And what does that tell you? That tells you where everything is going. I don't care what anyone else says. That may be the worst, most unofficial, but that tells me that there is a huge groundswell. Don't tell me about that you're not on TikTok and different people. And you know what? A lot of the older people that are not on TikTok are voting for Trump. They're voting for Trump with their wallet. They're voting for Trump with their beliefs. They're voting for Trump just, for a lot of different things. So again, where we're going with all this is not to get too deep into the political scene, but it's to talk about the fact that I don't think that the Fed is going to have any effect. I don't think that people care about the economy. If it starts to improve and rates start to drop as we head into the election, I don't think it's going to help Biden enough at all, not even close. And I think everyone else is looking at that too. But let's take a look at what else does matter. We got the ECB meeting happening tomorrow. That's going to make a difference for morning rates because it's going to happen. Looking for the right, here it is. All right, the European Central Bank meets tomorrow, and like someone pointed out, it's basically more, and it's going to have an effect on the morning rate sheet because it has effect on overnight trading. If they do cut rates, rate cut this week not in question. Path beyond is unclear. The uptick in Eurozone inflation increasingly drawing comparisons to the U.S., fueling concern the European Central Bank could face similar impediments to lowering interest rates at the Federal Reserve. While there have been clear differences in the drivers of price growth either side of the Atlantic, the ECB officials repeatedly stress some economists see important parallels and warn against underestimating the risk of more persistent pressures. So they're going to be looking to see how this ECB meeting goes in the morning. That's going to affect your morning rate sheet. Just keep that in mind. If they like what they hear, we'll see that help morning rate sheets. If not, it could put a little pressure on mortgage bonds for the morning. Other stuff, though, here's your ADP data. U.S. hiring slows to the weakest pace since the start of the year in the ADP data. Markets didn't have a huge reaction to this, though. It is private payroll data, but private payrolls rose 152,000 in May, which was lower than forecast. This has nothing to do with what we're going to see on Friday from the BLS jobs report, but it is one more report. We had JOLTS yesterday. Talking about JOLTS a little bit more, let me go ahead and go to the 5 things you need to know to start your day. Take a look here. This was an interesting read this morning. Finally, here's what Joe's interested in this morning. While we wait for Friday's non-farm payroll, here are 2 key charts from yesterday's JOLTS report. The yellow line is the total number of job openings, which came in just above 8 million, solidly below economist expectations. The white line is the quit rate, which has flatlined for a few months and remains beneath pre-COVID levels. So what we're looking at here, the quit rate, is how many people are quitting their jobs. If a lot of people are quitting, it means that they're expecting they can get better jobs, another job very quickly, and it shows strength in the labor market. When you see the quit rate slow down, that shows some softening in the labor market. People are afraid to quit their job. When you see a big drop in the number of job openings, that would be part of the reason why people are afraid to quit their job. There's less jobs to go out to. When you listen to the people and we listen to what's really going on out there, there are a lot of people who are struggling to find jobs, especially good paying jobs in tech sectors and white collar and things that pay some money. What you're seeing are jobs in hospitality and restaurants and travel and leisure, and those jobs don't pay as well historically. So all of these things pointing to everything. Ron said, you are correct. No one pays attention to ADP private payroll, but it is interesting to watch the difference between small business hirings in the ADP, which is real, and the BLS, which is modeled. Absolutely. So anyway, my friends, where I'm going with all this is that we are seeing a really nice recovery in bonds, seeing mortgage-backed securities improve. We want to continue to cautiously float everything. I suggest risking floating into Friday. If Friday's data comes in stronger, we're going to see bonds give up these gains. So if you have loans, especially loans closing near term that are risk averse, that you don't want to risk, you need to have them locked before Friday's data. So you would want to lock them tomorrow or consider locking them later today. However, if it was my personal loan, I would absolutely be waiting to see what Friday brings. seeing what the whispers are for the data next week. I mean, next week we could see rates drop. Here we are, 7.07. We could be back in the sixes. Though in middle of May, we saw 6.99. We would blow this out of the water. If we go 3 for 3, the trifecta, remember, we got Friday's jobs report. We've got Wednesday's CPI inflation data, and then we've got Wednesday's press conference. We know the Fed is not going to raise or lower their interest rate on Wednesday next week. We know that the Fed policy statement's going to be pretty blah, right? Data dependent, looking for signs, continued improvement in inflation, blah, blah, blah. But when they get to the press conference, that's where we're going to make or break it. So there's your 3 events over the next 7 days between today, Wednesday, and next Wednesday. And it's going to be compressed as we get there. Friday, and then next Wednesday. Those are your 3 events that can make or break interest rates. If things go against us, we're going to see rates go up to, another quarter point, but they'll come back down. If they get better, we're going to see rates get down, and I say 6 3/4. Let me know what your forecast is in the bottom, and we'll go from there. As far as I'm not flying to Pittsburgh. I'm driving. It's easier because we do the Nices, and driving would take too long. There's no direct flight from my local airport. I'd have to drive 2.5 hours to get to the airport. I'm able to drive 8 hours or whatever it is to Pittsburgh. I think it might even be less than that. Now that I have my bionic leg, can I go through normal TSA line? Yeah, I can. It does. It's not supposed to set it off. However, I do go through PreCheck TSA, which has the metal detector, and we'll see what that is. And no, I don't fly private, especially this year because we did lose a lot of members that left the business or were just struggling financially. So with that said, if you are not struggling financially, even I know that everyone's not necessarily wealthy right now, but if you are looking to grow your business and get more business, don't forget to check us out at originatorssuccess.com. Find out how we can help you to get loans from Google and social media. It's what we do. Although I love talking about rates and pricing each and every day, that's what we do. We've got some awesome tools. Go check them out. So, all right, my friends, I'm going to wrap it up. Thank you so much for joining me. I'll see you guys tomorrow. Again, not going to see much tomorrow to talk about. Friday is going to be the jobs data. That's the big one. Mike said, my ankle hardware does not set off the TSA alarm. You should be good. Thanks, Mike. Appreciate that, sir. It's good to know. So, because it's funny, because my hat, oftentimes my hat, the metal in the hat will set it off. So it's funny how that happens. So thank you, my friend. I will catch you all later. You guys have a fantastic day. Bye-bye.